Family, alright, understanding the difference between what you have done right and what you have done wrong is one of the most important ways to develop and grow as a forex trader. Yes, we'll make mistakes along the way. However, it is important to know where we fell down in order to fix and continuously improve ourselves. And that is the purpose of journaling. And in this video, I'll be breaking down my journaling strategy and the things I look for when documenting in my journal, while also showing you my spreadsheet that I use to document my trade. Hi, my name is Garth Grant and welcome if you're new and returning family. No flow. So the first thing that I document in my journal is the capital. This year I'm starting off with $100 and this is like a personal challenge. I want to see how much I can carry to. I am aiming for 400,000. My team far-fetched, but you never know what is what until you try. Alright, so yeah, my account, I have $100 in it, and really when you document the initial investment, this is just to show you where you're starting from. Alright, and they say the journey of 1,000 miles begins with the first step, and by documenting your first deposit, you will know where you have put your first foot. Alright, so the second tip is write down the pairs or pair that you'll be trading for that particular day. Alright, and I can't stress this enough. And guys, this is really important. Please ensure that you trade 1 to 2 pairs. The more pairs you try to trade or try to understand, you'll get more confused and flustered, especially when you're a new trader. The market can get overwhelming and things might start looking familiar, you make mistakes. So for now, we're just focusing on 1 or 2 pairs that you like, or maybe your friends are using and you want to try that out as well. But really, when you understand the pair, eventually if you're trying and figure out each of them, you'll just choose what speaks to you as a trader. There are hundreds of different pairs and indices that you can trade, so there's a lot to go around. So it don't necessarily mean that if I trade your JPY, you have to trade it. You can trade something else. So how you kind of understand which pair is best for you is that you'll just search up some pairs. Search up the pairs that I say that your friends are using, back test it, see if it's good for you, or see if you can actually like understand it and be consistent at it. And then if all go well and that's what you like, then so be it, you just trade that one. Personally though, I only trade Euro JPY and S&P 500 to date, and in a way I'm going back to USD JPY. I'm not sure if I will be actually going back fully fledged to it, but I'm just testing the waters. Alright, so the third thing on my journal is the time and date when I enter. And this is important because let's say you lost that trade and it's been like a month or so and you want to find back that exact move. You can do it if you know the time and date of what time you enter the market. So you can go back, look at what the market was doing at that point in time, so you can analyze it better, and hopefully you can execute that trade or similar trades that will happen in the future. Alright, so the fourth tip is record the lot size that you use in that particular trade and the number of pips that you use with that lot size. Alright, this is just simply to give you a understanding of how much money you are risking per trade. And different brokers will calculate different pairs and indices in different volume, so you just have to figure out which one is the best, and you can figure it out while you're back test. And guys, also before you actually even go on a live account, use the demo. So say you're using IC Market or RoboForex, use a demo. Use a demo account first so I can understand how certain brokers handle or deal with the pair, because some brokers charge more per pip for a particular pair and compared to some other brokers. Alright, so we are future millionaires. Am I right? Am I right? If we are, just leave a comment, like, subscribe, comment down below, future millionaires. And this is important. In order to actually trade, you need to actually know why you made that particular trade. And why I say journaling is important, because this is where you can go back and look at your mistakes. So if you write down exactly what you were thinking at that point in time when you made that trade, then you understand how to either better analyze the market in the future, or if you find a winning analysis strategy, you will be able to actually stick to that, see if you can even better improve it, and just continue to grow. So that is important. All right, so the sixth thing that I have in my journal is how much I won or lost by in that particular trade. And this is really just to give you a cash perspective of how much money you are winning or losing at any point in time of any trade. Alright, so once the trade is complete, whether you win or lost, you just document it, how much I won by, how much I lost by, and so on. Alright, so all good things must come to an end, and if you are on the winning side or losing side, you must still document the time and the date of which you exit that trade. You can either exit prematurely or exit automatically, because if you stop loss or you take profit, you need to document that as well. It will give you an understanding of how long it took you for your trade to either hit your stop loss or you take profit, and it will kind of give you an understanding of which pair moves faster or slower throughout the day. Alright, and this is possibly maybe like just to allow you to reflect, but the last thing I have in my journal is how I felt about that trade that I took. If it was like impulse trading, or I did all my analysis and my markup and everything, and yet still I still lose or I won. Just to document how you feel at that moment once the trade has complete, because you can lose a trade, you know, and you will lose trade. You can lose a trade, and if in the event you lose a trade, you can still feel fine, because you know yeah, the rules, you stuck to it, and the market just decided never to grant you in your favor. So yeah, or maybe you can even in a trade and it still goes in the direction, but your stop loss was probably a bit too small and you lost the trade. You'll be a bit upset, but at the same time you'll be like, yes, I did my analysis accurately. However, the market just never went in my favor. And when you document all that thing, you can look back over everything. You'll find a way how to better actually know what to do next time, how to probably set a stop loss accurately, and so on and so forth. Alright, so just to revise the list of things that we have in our journal, it is 1, the current account size; 2, the pairs that you'll trade; 3, the date and time when you'll enter that trade; 4, the lot size you'll use in that trade; 5, why you made that trade in the first place; 6, how much you won or lost in that trade; 7, what time you exit that trade; and 8 is how you feel about that trade after. And now if anybody is still here, just if I like, comment, subscribe, share with a friend that you want to become a millionaire as well. And now I'm just going to show you my spreadsheet, and we're going to just jump on to Excel. Alright guys, so before we go to the spreadsheet, I just want to show you something. So up at the top of the bar here, you'll see this camera icon. You'll just click it and we copy. So copying this move, you'll copy it. Just copy it, and then now we'll go to the Excel sheet. So this is the Excel sheet, and this is what will happen. We'll just paste exactly what I copied right there. But I've already done some back testing, and I'm gonna show you this. So this is where you'd enter, as in the image before, as stated, the number of trades. Okay, and this is the Billionaires Academy spreadsheet. I use it because I am a member of the Billionaires Academy. Alright, so you have the image before, you have the image after, and wait, you put it here. So I just click it, you will be able to actually see that particular trade that you took. So this is after, and so on and so forth. So you can do the before and after. You would have the time you enter the trade, the date you enter the trade, the time you close out the trade, the reason for the trade. So this trade was price pushed above 50-minute roof retest and started rejecting, confirming new floor, which was once old roof. The target was a 4-hour old floor, turn potential roof. The entry zone was 4 hours, turnover to a new roof. I was trading on a 4-hour time frame range. That's just the reasoning as to why you took the trade. You have the pair right here. You have the pair, which is variable upon JPY. What you do, buy or sell. You have the amount that you're account is at currently. So the current account, the risk to reward ratio, which is 4.91, but I advise you guys to just stick to the 1 to 3. Stop loss in pips, take profit in pips, how much percentage of your account you're actually risking, which is 1%, but because this is a $10,000 account, you are easier to actually trade this. You don't necessarily need to trade 5% of your account, even though I recommend 5%. I'm just doing that because oftentimes most persons that are beginning are starting with a small account, somewhere around like $100 or $200. So for the 1%, now you're risking $100 per trade, and the lot size you'd use for a regular period like Great Britain Pound, Japanese Yen, USD, Japanese Yen, and so on and so forth. But like say if it's trading exotics like gold, then you trade using that lot size. Alright. Quantity is not necessarily important. The reward essentially is how much you'll be getting in percentage format when you do that trade if you win. And then the reward in actual figure, then there you go. You have the status as in whether you win or lose the trade, the profit or loss, because if you win you get the whole 491, but if you lose you'll only lose like, that's what, 1/5 or roughly like 1/4 of the actual price you would probably have entered on. So you would make $500, but if the trade go against you, you don't lose $100, and that is risk to reward ratio. Then you have your comment, which is how you feel after the trade. So if you feel confident, you feel where you could have made improvement, and so on and so forth. Then at the top right here, say just really an overview, profit and loss in cash, 5,374. Percentage change, number of wins, number of losses, win losses, average risk to reward ratio is like 3.11 or something. Yeah, and you know, just regular totals trade, average time, and yeah, so that's really it for the spreadsheet. And if anybody is still here, just like, comment, share, subscribe, and see you in the next video.